It's time for another edition of Lewis at Large, 60 minutes of smart talk radio featuring guests from all walks of life in conversation with your host, Warner Lewis. So sit back and lend us your ears for the next hour. Now here with today's first guest is the host of Lewis at Large, Warner Lewis.
Well, welcome everybody to another edition of Lewis at Large. Yours truly, Warner Lewis from the flight deck, and of course, that means some smart talk radio is in your future. In this segment, always happy to have Peter S. Cohan on with our show. He has been on here several times. He's an American businessman. He's an author, a venture capitalist, financier, and also a lecturer at American colleges. We are excited to have him. Peter, how are you, my friend?
I'm great. How are you?
Good. Well, you have always brought a unique perspective on the American economy to this show, and we're pleased to have you. I'm curious, just from sort of a million-foot view, and you look back on the economy, you look back on how things went overall in 2015, what was your take on the year overall? Did it play out how you thought it might?
Well, in a way, it didn't really play out how I thought it would, because at the beginning of the year, I remember I thought that the S&P 500 was going to be up about 11% this year, and it looks like we're going to be lucky if the S&P 500 is flat for the year. So the stocks didn't really do all that well in 2015, although they were very, very volatile. So this is one of the things that I found most unexpected or most surprising about 2015 was that we had these episodes of things plunging for reasons that I was really having trouble understanding. For example, one of the biggest ones was this summer, I think it was around August or so, when there was worries about China, and the market just kept going down and down and down, and then it sort of recovered, and then the market started getting very volatile because of the drop in oil prices and commodity prices, and it's just hard to tell. And then it would seem to have a tantrum because the Fed didn't raise interest rates. So it seems to be have been somewhat of a directionless year in terms of the stock market. But as far as the U.S. economy is concerned, it continued on a very stable track. I mean, since the financial crisis, we've really seen economic growth somewhere around 2% on average. And we've managed to get the unemployment rate down to a pretty good level. And the only problem has been that the unemployment rate has gone down, but wages have been not going up enough. So I think we do have growing income inequality, but if you just look at corporate earnings, they've continued to grow fairly steadily, and companies have been accumulating cash as well. Last time I checked, the corporate balance sheets had about $1.4 trillion worth of cash, which is very useful if you want to look for opportunities for growth, which is why 2015 was a record year for mergers and acquisitions. There were 10,000 mergers announced, and depending on how you count it, the announced value was between $2 and $4 trillion.
What about, and again, as you look back, you mentioned the economy growing around 2%. Some people are going to say that's nowhere near enough. What do you think?
I agree. I mean, it would be better if it was growing at 4%. But the problem we have is that one of the things that definitely happened in 2015 is that up until 2015, U.S. companies had been relying on exporting their products to other countries for growth because the dollar was weak, and so they could basically sell the product at lower prices. But this year the dollar has strengthened, which has really crimped the ability of U.S. companies to export. And also all the companies that were dependent on selling any kind of commodity have suffered. So long-winded way of saying that from the standpoint of the consumer, things got a lot better in 2015 because all those commodity prices went down. I mean, gasoline is now around $2 a gallon. I remember it was double that several years ago. So that's great. But in general, I think one of the things that's impeding 4% growth is the fact that the global economy is barely growing at all, and the U.S. economy is only growing at 2%. So it's very hard to find a market in which there's enough growth that a U.S. company can grow at 4%.
We can't have a conversation with you really without at least touching on the price of oil, which right now is somewhere right at, if not a little bit south of $40 a barrel. What tell us about the impact on that, and is that sort of behaving, so to speak, the way you thought it might?
Well, it's much lower than I thought it would be. I mean, I remember back in, I think it was June 2014, it was trading over $100 a barrel, which is really, really high. And then since then it's plunged. I mean, it was down as low as $35 a barrel earlier this week. What's going on is that China is slowing down, and China had been the big consumer of oil. At the same time, supply is remaining very high. Saudi Arabia has been continuing to pump out oil, and now Iran is beginning to get ready to throw oil onto the market, and there's a lot of countries throwing oil on the market, and the U.S. is still producing. So there's a tremendous amount of excess supply, and I didn't expect the price to go down that much. And in a way, every time the price of gasoline goes down, I can't remember how much it is, 10 cents a gallon. It's like $1 billion of stimulus that happens to the, or a penny a gallon is $1 billion of stimulus to the U.S. consumer. So in a way, this should be good for the consumer. Consumers should spend more, and that should have a beneficial effect on economic growth. It's not completely clear that that's what's happening, but it definitely should be a positive factor.
So you're not totally convinced that it may, in fact, just be a pure wash, if nothing else, is what you're saying?
Yeah, it doesn't really. I mean, there definitely seems to be a tremendous impact on companies that borrowed a lot of money to explore for oil. And I think that places in the country that had been booming, like Texas, and also some of the areas where they're doing the fracking, I guess in Pennsylvania, I guess South Dakota or North Dakota, places like that, had been doing really well. I'm guessing that there may be some slowdown there, and I'm also expecting some defaults on bonds that were sold to companies doing commodity exploration. Because the loans were issued on the basis of the idea that prices would be much higher than they actually are.
If you just joined us, yours truly, Warner Lewis from the flight deck of Lewis at Large Radio. Our special guest this segment, an old friend of the show, Peter S. Cohan. He is a venture capitalist, financier, author, and also a college lecturer. Indeed, let's talk about that real quickly. Tell us what you do at the university level.
Okay, well, I teach at Babson College in Massachusetts, in Wellesley, Massachusetts. It's the top-rated school for entrepreneurship in the country, according to U.S. News and World Report. And I teach courses in entrepreneurship and strategy. And I had been a part-time lecturer there, but they made me a full-time lecturer about a year ago. And I've created 5 new courses, and it's really, really fun. And it also gives me a chance to do outside work as well. So it's been really a good thing for me to do. I enjoy it a lot.
So are you known as Professor Tough, or is it easy?
I'm pretty popular, but my exams are hard. I just gave an exam yesterday, and I got the feeling that the students thought it was hard, but hopefully they still like me, even though I gave them a hard exam.
What about, let's talk about the United States and its place in the world, particularly as it relates to the economy, and let's focus a little bit on China. You mentioned it earlier. Tell us, again, from where you sit, the impact that the issues that they are facing is having on our economy and maybe at a more global level, the world in general.
Yes. Well, I'm heading off to China in January, as I do every year, because I have a course out there. And this January, namely 11 months ago, I was in China, and there was an economist who was talking to our students, and he said that the government is cracking down on corruption. And he also said the economy is not growing as fast as the government says. And that was sort of an early warning indicator of a lot of what he said has really played out in the last year. So China has been a huge source of growth because they were claimed to be growing at 10% a year. So I remember I met with the CFO of GE several years ago, and I basically advised GE to invest only be in businesses where they can sell to countries like China and India, where the growth is really high, and there's a lot of demand for infrastructure, and they can supply it. But now, with the economy slowing down, I saw a number that they expected to grow at 6%, which sounds really good, but much slower than it was before. It's having an effect all over the world. There are places in the world like Chile, where I've been, and certainly in Africa and Australia, where China has been buying up raw materials, iron ore, coal, everything that they need for energy and building roads and all this kind of stuff, where I question whether they're going to buy as much. And that means that all these countries that were so excited about Chinese investment, including the U.S., are going to have to look somewhere else for growth. And so that's a big concern. And I also think that the air pollution in China is incredibly bad. And it's so bad that people have, if they can, they want to leave so their children don't have to, get that bad air into their lungs. So if they decide they need to fix that problem, they may end up being less of an industrial powerhouse. Now, if they can come up with some technology that will allow them to continue to be an industrial powerhouse without polluting the air as much, I think that would be a really nice solution, but I don't know if they have that answer yet.
What about maybe at a lesser level, but interested to get your take on as Cuba becomes more westernized and those relationships normalize, so to speak? What do you see there as the future in terms of any kind of either economic development or how it might impact the United States?
I don't know if I would see it as a huge financial impact either way. I think it's kind of a nice historical thing since we had, I guess, pretty good relationships with Cuba up until the Cold War, and then, of course, there was the Cuban Missile Crisis, and it's been kind of tense for the last 50 years or so. So I think from a historical standpoint, it's nice that we're, opening up relations, but, ultimately, I don't see it as a huge economic powerhouse. Eventually, perhaps we can have American tourists going there. I know that they want to try to encourage Cuban startups, but it seems like they need to get comfortable with the idea of letting people use the internet and giving people internet access. And there's a lot of basic things. If you go to Cuba, I mean, they're still driving around in 1950 style cars. So in theory, there's a lot of potential to sort of upgrade them into the 21st century with all those things. But it's still a fairly small island, so I don't see it necessarily having a huge impact. But it could be positive.
As we're recording this, we are 24 hours away or less from the Feds either deciding to raise rates or not. And I'm curious, give us an either-or scenario. If they raise rates, and let's just for this discussion, let's just say they raise them 25 basis points. What does that mean to you and any impact or results spinning out of that? Or if they don't, what does that mean to you, all things being equal?
Well, if they do, I think that's what the market is expecting. I mean, if they don't, I think the market would be shocked. And it would be a signal that there's something really bad that nobody knows about, that the Fed knows about. And I think it would really, it wouldn't surprise me if the Dow were to drop 500 to 800 points if they don't raise rates, because it would tell me that they see something that is really horrible. And I think that the market is going to be waiting to hear the kind of language that they use to tell the market on what basis they would raise interest rates above 25 basis points. The next time around. So I think what's going to happen is that they're going to say something like, we're raising them 25 basis points, and we'll be monitoring inflation very carefully and economic growth, and we're going to lean on the side of trying to encourage employment growth, and we'll watch the data and decide whether to raise them again in the future. So I think that's pretty much what they're going to say, and I think the market will expect that, and I don't think ultimately it will make much difference. But I think the reason to raise the rates is sort of to signal that finally, after 8 years, depending on how you count it, the Great Recession, as it's euphemistically called, is finally over.
Right. What about, and again, we're talking with Peter S. Cohan. He's an adventure capitalist, financier, author, lecturer, and now is known as Professor Cohan from time to time, maybe amongst other things at school. But I'm curious as to your take as, again, you work with lots of different companies and entrepreneurs. Where are the investment dollars going into American business? What kind of industries now are seeing lots of new entrepreneurials and lots of new money flowing into?
Well, I can tell you about one that I know well because you mentioned I'm a venture capitalist. I invested in a company that's is a bank startup, which is kind of surprising. But I invested in it last December, and when I invested in it, the company was valued at $1 billion, and then it raised about $1.4 billion this fall, which valued the company at $4 billion. And then a couple of weeks ago, the CEO was interviewed, and he said, "We want to take this company public, and it's going to be valued at $30 billion." So this industry, it's called marketplace lending, has done phenomenally well in terms of attracting capital. And this company that I invested in has attracted more than anybody else. It got $1.4 billion this fall. So that's an area where capital is definitely flowing. And the basic idea is that the company is providing people with better banking services than they get from the banks. And they're getting a lot of business because of that.
And this is all done via apps and online, or how? Tell us about that.
Yes, they basically do it via apps and online. The basic idea is that they started off doing student loan refinancing, and so people would go online and they provide information about their income and their job and their earnings potential. And I don't exactly know all the details, but the result was that they would get a lower loan rate. And the interesting thing was that they were very selective about who they would lend money to. They would try to lend money to people who were graduates from selective schools, so that they had a higher chance of having a good income, and they were highly employable. And since then, they've diversified into other kinds of lending, like mortgages, and they're also talking about getting into wealth management, helping people manage their money, and they're even trying to set up sort of a way of having people deposit their money so that they don't need to work with banks anymore, which I find a really interesting idea, because I feel like the financial crisis and the financial crises that I've been seeing over the last several decades and worked to help fix up over the last several decades have all been due to the idea that there is a basic moral hazard problem in our banking industry, which is that banks are able to lend out depositors' money and give it to lenders who get paid bonuses for taking lending risk. And then if the borrower doesn't pay back the money, the government is the one that bails out the bank. So essentially, people are putting their deposits, which they hope to keep safe, at risk, so that a banker can get really rich. And then if they make a mistake, the government steps in and bails them out. So if they can do this, if this company is called SoFi and some of the other ones can set up these ways for people to basically deposit their money but not have to be involved in this kind of moral hazard, I think that would be better for the U.S. economy and the U.S. government, not to be kind of stepping in to bail out. I'm still makes my blood boil thinking about the idea that taxpayer money went to pay bankers bonuses after they nearly ruined the entire global economy back in 2008.
What about, here's a question that we probably would not be talking about 10, certainly 15, 20 years ago, and that is the effect of world events and in particular acts of terrorism, any kind of negative aggression towards the United States or towards Western countries at least. How does that, in your opinion, how did that affect us in 2015, and does it have any residual effect going forward?
You know what? I think it's more of an election thing. It's very helpful for people running for office to use to whip up fear. But if you look at it statistically, the odds of dying in a terror attack are like 1 in 20 million, and the odds of getting hit by lightning are 1 in 700,000. So I think it's for some reason it's really easy to whip up a national and global fear and panic with this terrorism stuff, but that's what they want. You're playing into their hands, and if you look at it from a statistical standpoint, there is something to be afraid of, but you should be more afraid of getting struck by lightning or getting eaten by a shark.
That's comforting, I think. But I'm not sure. What about, Peter, again, it's difficult to prognosticate, understand that for sure, but just in general terms, as we start to wind down here, 2016, go out even a little bit more, what's your feeling about the United States economy, about growth, unemployment, if you want, all of that? Sort of give us sort of what you see as sort of a global view.
My global view is that I feel like 2016 could be a turbulent year. There are several things that make me a little uncomfortable right now, and none of them have to do with terrorism. They have to do with something called leveraged loans. There's $4.6 trillion worth of loans that have been made for basically leveraged buyouts, for lending to help private equity firms or leveraged buyout firms to buy other companies. And the problem is that there's a lot of junk in there, a lot of bonds that go along with the leverage loans that are of low quality, that may not be paid back, that were being lent to companies that do oil and gas and commodities work, where the price is way down. So it's a long-winded way of saying that I am concerned about how exposed investors will be. I mean, just this week we had one of the mutual funds that invest in these junk bonds decided not to let people redeem their money. Not to let people pull out their money from their accounts. So that that liquidity freeze just brings back memories immediately of what happened back in Bernie Madoff and this kind of liquidity crisis that can radiate throughout the system. Other people, other institutions that are investing in these kinds of bonds get hurt. Banks that lend money to them could also find themselves short of capital. A lot of people could be trying to get out the door at the same time. So there's a question of how widely that radiates throughout the economy, how widely the problem of plunging commodity prices radiates throughout the economy. I'm concerned that the possibility that the lower commodity prices, the beneficial effect of that may be offset by the negative effect of companies and how it affects the stock market. But having said all that, the good news is that corporate balance sheets are in general very healthy. They have a lot of cash. There's a lot of merger activity, which is a signal of corporate confidence. And all the mergers that happened in 2015 will also create demand for mergers in 2016 because any company that didn't merge will feel like they have to get into the merger game. So there's going to be a lot of capital flowing in 2016 and 2017. Whoever gets elected president, that's going to make a huge difference in my mind in terms of the outlook for the economy.
You, in the past, have been a pretty prolific author. I know you speak a lot. What about new works coming from you? I know you have a column. We want to share that for sure. But what about anything coming out in hardback or paperback?
I am thinking about some ideas for books, so I don't think I'll come out with anything next year, but hopefully I'll get a contract for a book next year. And the two topics that I would say that one topic that I'm thinking about right now that I think is of most general interest is the idea of sources of growth. How does a CEO of a company find ways to grow? Because to me, I think that's the primary job of a company, of a CEO. The only justification I can see for paying somebody tens of millions of dollars is if they are the best people in the company to come up with a growth idea, an idea for how they can accelerate their revenue and profit growth, and then make it happen so that investors see the results. So I think that there's a gap there between the need for growth and the ability of CEOs to deliver it. So that's what I would like to do a book on.
Peter, as we start to wind down here, would you share with our listeners, please, at Lewis at Large, your website and how that people can find out more about not only the books that you've written, but also your column and any other more information about Peter S. Cohan's and Associates?
Sure, absolutely. Well, they can go visit my website, which is petercohan, COHAN.com, and they can visit my blog. I have a blog at Forbes called Startup Economy, and I also have blogs on Inc. There's one called The Hungry Startup, and I even write a column for a local Massachusetts newspaper, the Worcester Telegram and Gazette, called Wall in Maine. And if anybody's interested in looking at what I'm teaching, they can go to my page on the Babson College website.
Sounds good. Listen, thank you again so much. Do appreciate your insight, and thanks for spending time with us. Have a great 2016, and enjoy your trip to China. We'd love to have you back on again.
Thank you very much, Warner.
You bet. We will be back with more right after this on Lewis at Large.